Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website, rickackerman.com. He's speaking to us from South Florida. Welcome back to the show, Rick.
Thanks for inviting me on, Jim. It's always a pleasure to connect with your audience.
To me, it seems the markets, stock markets overall, are doing kind of a gentle step down, having reached their peaks at the end of last year. Any sign of that changing?
Well, it's amazing. I mean, it shows sort of an advanced step of mental retardedness in that nobody can think of any reason why stocks should go higher, and they're not, but they're certainly not going lower. I just see the market as in a broad topping pattern right now. And even though the chimps that throw your hard-earned money at the market, the same five stocks are continuing to do that, I think it's a distribution. Every rally is a sale here.
Mm-hmm. And so when you're in a pattern like that, is it a matter of picking the winners? Or, again, as you said, you know, I don't know if they're the fangs anymore, probably not, but you still have your top five.
Yeah, I have a very seasoned chat room. I've got great traders from around the world, and one guy who's particularly good. He's written a pretty well-known stock market letter himself. He was out there a couple of weeks ago saying, you know, I think we should really just put all our energy into finding a good top to short for 1,000 points, 1,000-point ride lower. And I had to point out that nobody's going to get that ride, even if it happens, that it will, but it's the big collapse, just to take one example of how it would happen so that nobody can get short. You'd have an enormous rally, and then the reversal would occur in the dead of New York's night. So the rally spike would essentially impale all the shorts, but we don't get opportunities really to short 1,000-point downtrends. It just doesn't happen. It certainly hasn't happened other than with the March 2020 episode. That's about it. But even then, and of course going all the way back to 1987, if you get a couple good days where you're thinking, hey, these puts are finally come alive, you better be prepared to get out of them before day 4, because we rarely had a downtrend that gave bears, put holders, something like a feeling of exhilaration.
Inflation making all the headlines, is it going to stick around?
Not hardly. You know, the one thing that all the inflationists need to reckon with is the dollar. It just keeps getting stronger and stronger, and even though even I thought we were going into a significant correction yesterday, it lasted all of a day, and the dollar has, of course, blasted off again. So you need to tell me how everything, we're going to have runaway inflation if the dollar keeps getting stronger. When it does get stronger, it subjects virtually every debtor on this planet who owes in dollars, which means pretty much everybody, and it includes most debt. The burden of debt will increase. That's not inflationary. That's a primary symptom of deflation.
Russia defaulting on its foreign debt, they haven't done that since the Russian Revolution back in the late, or I should say the early 1900s. Is that a major concern, or do you think the Russians somehow will be able to scrape up the cash somewhere? They do have great gold reserves. Yeah,
I don't think it matters at all. I mean, there's so many forces to destabilize the global financial system other than a Russian default could be the thing that the event that sort of precipitates out a collapse that's been waiting to happen. But if you just sort of seize on the headline and let's say short the stock market simply because Russia's about to default, you're going to lose money.
Mm-hmm. Crude oil, is it going to remain strong?
It will, and doubly so, simply because everybody who's having to buy crude has to pay for it in increasingly scarce dollars. Or I won't say scarce, because there's still a plentiful supply to be ginned up out of thin air. But let's say the enthusiasm for borrowing those dollars, which is a dynamic that equates to money velocity, is not there. So the dollar is strengthening organically, and the price of oil is increasing even more than it seems to be on a chart. So currently the May crude's trading around 104. I'm looking for minimum 117. Assuming May gets past $1.05, that's kind of a crucial resistance. But if it pops through that, you're going to see another $12 run up to $1.17, and if it gets through there, it would indicate even higher prices above 130.
Sure, we're about to go into the summer driving season, and so far nobody's indicated in real terms that they plan to give up their SUV.
Yeah, it's amazing. You know, I'm filling up my, I've got an SUV, and maybe it cost me $60 or $70 to fill it up. But I look at these Chevy Suburbans and some of the behemoth SUVs, and I'm thinking, geez, how do these guys do it? I mean, but you get a feeling when you see these cars all shiny new, and that the drivers are well inured to even $10 a gallon gas. They'll still keep filling it up, even if it costs them $400 a tank. And but it does hurt. It's hurting driving at some level. I mean, people are driving less, but the ones with the real guzzlers, they not only they don't seem to have much problem at the pump, but they're also the ones when I'm on I-95 down. South Florida has no speeding enforcement, not even slightly. So if you're doing 90 miles an hour, you'll get passed like you're standing still, and the cars that pass you doing 130, they get passed like they're standing still by motorcycles that are capable of speeds above 130. So it's just you see the big Ford pickups in particular, the F-150, even the 250, and those guys they drive, they accelerate ahead of the traffic, weaving in and out of traffic, no lane change signals at 95, 100 miles an hour, and you can bet they're not worried about fuel economy.
I bet they're not wearing seatbelts either.
I don't know about that. It's almost, with all of us, I think it's become habitual, and we've all got, there's the microchip that has someone tell us, buckle your seatbelts. So.
I do know people who've had that disabled. So, and just getting into the car front here, the chip shortage, any sign that's going to abate so that the car manufacturers can meet all these back orders?
Well, what sign would we have, really? I mean, nobody knows. Even if you go to the expert on microprocessors who writes for Wired magazine or whatever, he only has his sources, and they don't know either. So you can see that the supply chain is so impacted for lack of chips. And it's not like the good old days when car problems meant you go under the hood and maybe it was you needed new spark plugs, or your distributor cap needed a turn or something like that. These days, none of us can really fix the things that go wrong. So the chip problem is very critical.
Mm-hmm. Even my father, who was a master mechanic, had to get the computer to analyze the engine. He could fix the problem, but the computer had to tell him what it was. That's how computerized everything is. So, inflation, do you think it will be its own cure? And also in the U.S., the Fed keeps talking about raising rates, but they haven't raised them. Meanwhile, in Canada, the Bank of Canada has upped rates by 0.5%. Usually it's 0.25% at a time, but it was 0.5 this time. Is the Fed going to move?
They can't move much. It's not like we can do a Volcker and get rates up to 20% to kill inflation. There's so much borrowing right now that's punitively subjected to higher rates that even if I'd be surprised if we can get the federal funds rate much above 3 or 4%. We're risking, of course, the collapse of the Western financial system with each turn of the screw. So the Fed may be talking about an unlimited vista, just tightening, but they can't keep that up for long, really, before they kill. They send everything into a kamikaze dive.
Mm-hmm. Friend of the show, Wolf Richter, said the cure for inflation is more painful than inflation itself. Would you agree with that?
Oh, absolutely. But it's going to cure itself. You know, we've got the housing market in particular has reached a point where you can't really imagine much greater inflation. We've got an affordability problem, for one, because mortgage rates have gone up. So if there's nothing moving out there. The home prices are rising because there's zero supply. Nobody wants to sell because nobody knows where they would move. If you sell your house for some fabulous price, you're going to pay an exorbitant price to move somewhere else. So everybody's sort of sitting still, and with very few transactions in the market, you know, the buyers, the net buyers at the margin are just kind of driving prices, but it's not very realistic. And a housing price collapse is just one more thing that's coming besides a bear market that will end this inflation pretty much overnight.
Government or politicians have a simplistic solution. City halls need to loosen up their permitting process so we can build more houses. Contractors tell me, though, their supplies, lumber is still super expensive. Rebar, very expensive. Concrete, expensive. Labor, expensive. To build that new home, it costs 20% more, so that the price of that home has gone up 20%. You're just covering materials and labor. It's not even anything else. Right,
it's true. I mean, how much more inflation can you extrapolate into housing or from housing when the price is already at a point where nobody can afford a house?
We'll have more with Rick Ackerman right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, normally if there's a major war somewhere that boosts the price of gold unbelievably, we haven't seen that boost. Do you expect it to happen?
Not necessarily. You know, I've been a gold bull forever, but a gold bull in a way of saying that gold doesn't have to go to $5,000 an ounce, much less $50,000 to be in a bull market. It can sit very nicely at $2,000 while all other classes of investable assets are falling, and it could be said then that gold is doing just fine. So gold is in a sort of mentally retarded stunt your growth bull market right now. It just refuses to make its move, and but it's certainly not going down much. It's holding its own against whatever crisis might be out there, and I'm pretty sure that gold's going to do fine if you have physical gold in particular relative to anything else you could be holding against that rainy day.
In Canada, the government's trying to tax us into electric vehicles. Each electric car has about 300 pounds of copper on average. Do we have enough copper if there is this big demand for electric cars?
I think there's plenty of copper out there. If you go to some of the biggest copper mines, you see the holes they grow to infinity. So I don't know. It's not like crude oil where you get a couple of cartels working against supply and it pushes prices up. I think copper is fungible in terms of sources. So, and also I think you have to kind of factor that rainy day supply and demand, equation for all these things that are going to require more copper. We're going to, of course, be replacing a lot of cars, with, a lot of, gas-driven cars with electric vehicles, but the market I don't think is going to be particularly robust in the difficult times that lie ahead. I see $5.22 a pound for copper, which gives it a little room from here. We're currently at $4.73 on a June contract, so we've got a move of about whatever it is, 11% to get to that target.
Gosh, I remember when copper was around the 272 mark forever. It never seemed to go up or down from that point. So maybe we're going to reach a point where we have a sweet spot for copper as well.
Well, at one point, the deflationists wrongly made the case that the demand for copper was going to absolutely die simply because we were replacing a telecom infrastructure globally with wireless. And of course, you can see since then that the slowing of demand for telephone pole wiring did not really offset other demands for copper.
Cryptocurrencies, what's going on there?
Well, it's in a kind of screw in a pooch mode right now. Bitcoin is trading at 40,000, and I'm using a target of 61,163 on Bitcoin. But I have to say, if it got there, you're talking about a 50% rally from the current price. It would trace out the most gorgeous bearish head and shoulders pattern on the daily chart, with a pattern that began in late 2020. So you could say that I'm bullish on Bitcoin for the present, and quite bullish really, because my target does imply a 50% rally. But I'm not really a Bitcoin bull, and I certainly don't see it as a place where you should store your money, pile it up against potentially difficult times. Give me gold any day of the week.
Rick, anything else that we should be taking a close look at right now?
We've talked in the past about what I call the barbell strategy. That originated with my friend Doug Bainfield. He's a wealth manager with Morgan Stanley Dean Water in Boulder, Colorado. And Doug's idea, this goes back maybe about a year and a half, was that your ultimate, let's say a very solid hedge against any scenario you might foresee when the bull market ends, would put gold against treasuries. And he's still in that, but I felt like it was a little premature to jump in all the way, because the bond side, and that includes tax-free munis or municipal bonds, but also 10 to 30 year, I felt it was a little premature to go into them, because I've been looking for rates on the 30-year. Well, let's go to the 10-year to top at around 3.24%. That's my target, and we're currently with respect to the 30-year or 20-plus year, we're at let's call it 2.9%. So we've got a pretty good move left before I think you can get back in the water with bonds. But when that comes, when you see 3.24% on the 10-year, it'd be a good time to put on that hedge. And of course, with gold, it doesn't matter when you buy it, you'll be all right.
Rick, thank you so much for chatting with us.
Well, thank you very much for inviting me on, Jim. It's always a pleasure.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.